we did a video. I'm actually going to pull it up. It was the all-in-one loan explained back in, this must have been 2022, I want to
Yeah,
say.
I think
Yeah,
it
it
was
was
December.
2022. So about 2 years has passed. The product is still active. Lots of people have signed up, for the product. That video has almost 10,000 views. And then we had a couple of short clips that came out of that. And a lot of people have been really enjoying the product. If you're here tuning in live and you have the all-in-one loan, comment below. Let me know how long you've had the product for, what have you used it for, how's it been benefiting you. Just, share that. Would love to see if there's anyone in the house that actually has the all-in-one loan product. I know I have quite a few of my clients going all the way back to even before, I want to say before COVID, but definitely after COVID.
Hmm.
It was a very, very popular product. Rates were really attractive. It's a different environment today. And I still think the product has a ton of value as we continue to progress in this high interest rate environment that we're in today. So with that being said, we're going to do an all-in-one loan breakdown again, just updated in 2024. We're going to look at what's changed, what's in the pipeline, what people should be aware of, and just really break this down for you all. And the difference between the video we did last time was pre-recorded. So now we're going to be
Yeah,
live doing the lesson and then going to answer your questions. So if you got questions about the all-in-one, how to qualify, what are the fees, different, how to use the thing, we're going to break all that down here and then just dialogue with you guys. All right. So with that being said, Harrison, I want to give you the floor to just reintroduce yourself again and your position with all-in-one. The history of the all-in-one loan product, I think would be great just to get a little recap on the
yeah,
history of this product, how it was formed, and maybe what was the original sort of purpose for the product, for the company rolling this kind of a product out, and maybe what has it evolved into, if it's changed or if it's been the same. I think that'd be great for you
certainly.
to take over.
Yeah, well, pleasure to be on here so much, Denzel. Thank you so much for giving me the opportunity to talk about the story of the all-in-one. It all starts back in 20 BC. No, sorry, that's too far back. Essentially, the all-in-one kind of was brought to the United States from Europe, Australia. Out there, they had programs that were called offset or sweep accounts, and it was actually a product brought by the CEO and founder of CMG to the United States in 2006. It was under a different name back then. It was called the Homeownership Accelerator. They did change the name to the all-in-one, a little different functionality, but the premise of the product has essentially stayed the same since it's really been brought out here in the United States.
Gotcha.
As for kind of a little bit of a breakdown on uh, us or the CMG as an entity, the intention kind of to bring this product here and to utilize it is to provide obviously something different that's not being offered anywhere else. Or if there are other programs that are being offered similar to this, it's not like it's the majority. I mean, when you talk to somebody, you go, okay, what loan are you in, or what are you trying to buy a home? What product are you using? It's one of the standard FHA, VA, conventional, USDA, etc. You obviously have the outliers that are doing different financing tools like portfolio loans and bank statement and so on. But for the most part, the people that are coming to us for this loan realize that they're in a different financial position than perhaps they were when they first bought their home. And this is a way for them to essentially actually be treating themselves like a business. They get to take ownership of their money and how much they get to use towards their home principal balance. And then they're rewarded for it by having the money put into their bank account, i.e., their mortgage, so that they spend less in interest. Helps them pay their home off faster. Obviously, it gives them access to additional funds for additional investments, or even pay off other debts that they have. So many times is it, hey, I have this car that has a $600 a month payment, but we owe 20 grand. How do I know if it makes sense? Well, we just run a simple little math problem. And in that example, obviously I skewed the favor in that one, but that's probably very similar to many people that have gotten into this loan. Essentially, they pay off that credit or the car or the credit card. Their payment on their home goes up slightly, but they're saving drastically more in monthly cash flow.
Gotcha. Cool. Anything else in regards to, so you mentioned Australia, right? Like, so I've
Right.
always told my audience, and this is based off of my experience, just coming across the concept. Actually, I don't have the book with me. Terrible. So there's a book that I read. It's called How to Retire, your home, How to Pay Off Your Debt Years Sooner by a guy named Harj Gill. And he, who I think is either he was the first one or one of the first people in Australia to introduce actually design the offset account, the HELOC, right?
Really?
So yeah, this guy named Harj Gill. So he's, I think, based out of Australia. I don't know if he's originally from there, and then I think at some point in time came to the U.S. right,
Yeah.
and rolled out his system. He's got a software that he sells, and he
Yeah,
basically
there was
shows
a
people how to.
software many years ago. Yeah.
Right. So you mentioned the owner, right, of, or the founder of the all-in-one loan product, right? Also out of Australia. Did I hear that correctly?
No, so the CEO of CMG went down to
He went down.
Australia
Ah, okay.
and learned about the product that they were offering there and said, there's nothing really similar to this in the United States. So it
Correct.
came here and went through the process of building those
Yeah.
relationships about, creating the banking relationships to be able to actually offer this program.
Gotcha. And do you know roughly what time that was? What year?
Around 2006.
Around
So this
2006.
product's
Okay.
been here for a while, but obviously been overseas for much longer. Now,
Hmm.
it's the all-in-one is like the Tesla of loan programs, if you will, whereas the 30-year mortgage is like the Model T, because that was it was created after the Great Depression to incentivize home ownership. We need to start updating the industry. And it's, we don't do the big, large billboards. There's no stadiums named after CMG all-in-one stadium or something like that. It's
Hmm.
like this, talking to people one-on-one and just
Correct.
having people brag about their amazing all-in-one at the dinner table on Thanksgiving as opposed to their 30-year mortgage.
Yeah. Which brings up, for a majority of people, the validity of the product, and then there's a strategy that's attached to this specific product. So there's two worlds that's going on, right?
Hmm.
And the world that I'm in is the velocity banking world, right?
Hmm.
Which is just a marketing term to define a strategy that
Yes.
a lot of my audience is practicing. So this velocity banking strategy also originates from Australia. In Australia, they were naming it mortgage acceleration system, right?
Yeah.
Or debt acceleration program system. It just, whatever the name was, it had to do with basically using a banking product, so debt, to eliminate and accelerate other debts. So it's like
Other debt.
when I'm talking to someone brand new, I'm like, this is basically debt consolidation, but with
Hmm.
more control, more flexibility, more liquidity, better terms on the agreement of the product that's being offered to you, right? So I kind of start them there, right? And then I want to say over the years, especially in the last maybe 5 to 10, the amount of steam that has picked up in this
Yeah.
concept, velocity banking. Some call it accelerated banking, some call it paycheck parking, some call it mortgage acceleration, accelerated velocity banking, or all different kinds of terms, marketing terms, to define a strategy. And
Yeah.
then there's a product from banks, not every bank, certain banks that I've spent the last 6 years educating my audience on what types of banks to look at, how to qualify, the different options you have. You got credit cards, you got personal lines of credits, and you got HELOCs, and you have all in one, right? And all in one is very, you could say it's basically a type of HELOC product, right? Very, very, very similar. So that's what's kind of happening. And then when people get on the internet and they see my videos, maybe other people's videos on how they could be using debt to pay off debt faster, immediately it's met with some resistance, and
Mm-hmm.
even has gone as far to the big YouTubers, the big content creators in the finance industry that have just flat out called this world, this space, a total scam, right? So
Hmm.
whether they say velocity banking is a scam, leveraging debt to pay off debt is a scam, right? Like the strategy of being able to park all your income into this tool and pay your bills out of it and increase cash flow and reduce your interest costs, right? Has has been viewed by very, very smart, intelligent financial advisors, other financial content creators as a total scam.
Yeah.
And so you have that resistance just on social media, on the internet. And what's interesting for my audience to really build their confidence, especially for those listening that are already not just bought in to the strategy, to the concept, to the products, but you're also living it, doing it, you've experienced results. So again, if you're someone that has the all-in-one loan product, let us know in the comments how long you've had it. If you've been practicing the velocity banking strategy with another product, another type of HELOC, PLOC, put that in the comments as well. Let me know you know, put your results, success, all of that in there. Because I think it's
Yeah.
super important that more people need to see this, right, and hear about it. And so, in addition to financial influencers, gurus, content creators like myself that don't necessarily have a whole lot of credibility. I did not go to college. I did not get uh, a degree in mathematics. I did not work in the banks, right? I'm a 28-year-old kid, right? So you've got people like me and others with that low credibility talking about an already foreign, not so heard of, not on the billboards type of strategy.
Mhm.
And now we've got a couple of banks, couple of institutions that are fully supporting the strategy itself and providing product and a service to complement this particular strategy that on my channel we call it velocity banking.
Mhm.
Right? So all-in-one loan is the product. CMG Financial is the company, institution,
Yep.
and the all-in-one loan product is provided by certain banks. One in particular, North Point, which
Yes,
is
sir.
one bank in particular that I know quite a few of my clients have went with out of California area. I want to say a couple in uh, New Orleans, even I want to say I have one in Florida, definitely up north. Like the product's available
Totally.
pretty much all
Nation.
across the United States, nationwide.